Hey guys, wanted to do a video on Forex. We try to cover all types of products here. So I did a video recently the other day about the stock market, and I've done one about Bitcoin and a couple other current cryptos. But this is regular Forex, what I would call regular Forex. This is the Canadian dollar. It's not, don't worry if you don't trade the Canadian dollar. It's not about the Canadian dollar, euro, or Japanese yen. It doesn't matter. It's the concepts we're trying to learn. So this is a 30-minute chart, as you can see. And I'm just kind of going over some patterns today. Nothing too technical, but I just wanted to sort of give you the idea in your head that you want to sort of train your brain to see these patterns without, having to, spend 2 hours on looking at a chart. Should just be kind of automatic, and eventually it gets that way. But as you can see, I drew in a support line here. So this is the, if you're new to Forex, if you're a beginner, just really quickly, it's a little confusing. So this is the US dollar, Canadian dollar pair. And the primary is the one listed first, so that's the US dollar. So if the market goes up, the US dollar is going up, and the Canadian dollar is going down. If the market goes down, then the US dollar is going down, and the Canadian dollar is going up. It's a little confusing. You can see over here is how many Canadian dollars it takes to buy a US dollar. So when the market goes down, the US dollar gets weaker. It takes 1.25 Canadian dollars. But if the market goes up, the US dollar gets stronger. It takes more Canadian dollars, right? It takes 1.265. So hopefully everybody kind of gets that. And you can look up tons of videos online and stuff. This is not really about that. It's not about comparing the U.S. economy to the Canadian dollar or anything like that. This is a technical analysis, so that's why it could apply to other things. So we have the last few days here where we broke down from, which is significant on a short time frame. But we want to always be completely cognizant of the bigger picture. So if we go out to the, let's go to a 2-hour chart. You can see that's the area I was just talking about, right? So this is the support area, and then that's the breakdown, okay? But what we see time and time again is a smaller pattern within a larger pattern. So what do I mean by that? Well, we have this whole area, right? You can see the outline here. I'll just draw another one in really quickly. But you can see this was the smaller thing that I just had up, right? So you have this pattern where you get this breakdown. But this pattern is within this bigger picture pattern. So it makes it much more significant. So instead of just being the last 3 days, this is the last 2 or 3 weeks, right? So kind of what I would term the intermediate time frame. So it bears more weight, and so you need to kind of be aware of that. So so we know this, but you want to sort of back out and look at bigger time frames and what the potential implications are for those. So if we go to a 4-hour chart, so now we start to see some other patterns kind of appear, and I'm just going to get rid of this for a second here. So you can see this, it's technically a head and shoulders pattern, which is bearish, very bearish. So you can see we got it, and now we've come down, and then we broke, right? Now, a lot of people talk about these types of patterns online, but you don't know, like, when the market's here, you're guessing, because you don't know what's going to happen next, right? And so you technically haven't had this shoulder, I guess, appear. Well, you don't know if it's coming or not, right? I mean, people always talk about stuff after the fact, but in real time, that's what you're seeing. Now, this does kind of matter, though, because if it is going to be a head and shoulders pattern and it is going to turn around and make a significant move down, this is kind of where it would do it, right? Somewhere in this area. We don't know exactly where, of course. But so if we see a kind of a rejection, like let's say we can, let's just move to like right there. So you see that, you're not taking any trades or shorts based on anything because we certainly don't know. But, you do see a rejection there, and that would kind of line up with the idea of a head and shoulders pattern. Now, I don't trade like head and shoulders patterns. I trade support and resistance, key levels, because a lot of times when somebody says a double top or a double bottom, I mean, you don't know it's a double top or a double bottom until after the fact, right? So it's kind of, you got to be careful with that kind of stuff. So what we can see is if you get this and then this high, and then it, it kind of comes to the area where if it did end up selling off, it would be a head and shoulders. You can see that this let's just back out here. See, if you can see this, that big down red bar, after it kind of rejected and then attempts up and then gets slammed down like that, that's kind of like, you can start saying, well, this is looking like a, pretty high probability head and shoulders type pattern. Again, I don't trade that type of thing. If I was going to short this area, it would be because of this sell-off. That would be because I do consider this very significant resistance. So that would be the reason to do it. And you can see it didn't even really get there, right? So let's assume you have some resistance drawn on your chart. It doesn't get there, but then it turns around and kind of does that. Well, that's kind of, it almost hit, right? So can you say that it hit the exact zone that you had drawn in? No, but, came pretty close. So anyway, the point is, so you can have these smaller patterns within the bigger pattern, right? And then if we back out to the daily, what I did was, you can see that we have a bigger version. So this is the version of the head and shoulders I was just talking about, right? But then when you back out to the daily, we have a bigger version of the same pattern, which is the same thing as this smaller trading range that I had highlighted within the bigger one, right? That I had drawn on a minute ago. I'll just put it back on just for the so you can see it on this type of time frame. So we had this bigger pattern, the smaller one was here, and then we broke down. Now we are hitting these support levels, so that's why I have this support level drawn in and here below. But these are pretty negative patterns. And again, this is not financial advice. I'm not telling you to short the US dollar and buy Canadian dollars or anything, but I would just caution on a lot of longs here. I mean, you could certainly attempt one here at either support level here, but I would just say that this has now become this. So the whole concept of support becoming resistance. I would say this area here, if we make it a little clearer, this 125, one spot 254 to one spot 256 type area, that area is now most likely, I would consider it to be pretty good resistance at this point. Because really, if these patterns are going to play out and make a bigger down move on the US dollar, of course we have massive support down here, but if that's going to play out, then the market shouldn't be able to get back above this. Or if it did, it would get up to the kind of the midpoint of this area, but that's another concept for another day. So, just be aware of these types of patterns, and that how patterns can be within, smaller versions can be within the bigger versions, and why that would matter. So if it was just a 3-day breakdown, it wouldn't be that significant. I mean, for the short term it is, but, if you know about the bigger picture that's breaking down, and then you also know about the sort of head and shoulders pattern that played out here, and then the larger version of that pattern playing out again, it kind of strengthens the case. I don't know that I'd be taking a long here, because the likelihood of it V-bottoming and going up back into this range up here is just much lower than what I would like to see. Could it do it? Yes, of course. Anything can happen at any time. But is the reward to risk really there? Because, you'd need to have your stop at least down at the 124 area. And, technically, could you take it for a bounce? Yeah, you could. But usually I'm swing trading this stuff personally. So, I probably would shy away from that. But this is good support. So I can see a case for it either way. If you're bullish on the US dollar down here, we do have great support here. So anyway, I'll try to keep this one at a minimum. If anybody has any questions or comments, just leave them in the comment section below. And if you have a stock or something you want me to take a look at, I'd be happy to do so. So I'll see you in the next one.